What does the recently signed $770 billion defense bill, Saudi Arabia's interest to spend more than $28 billion, and President Biden's nominee for the Pentagon's next chief buyer of arms have in common? They all signal great things to come for Lockheed Martin. Hi, my name is Louie, and in this video, we will talk about Lockheed Martin's revenue generators, its financials, and both the pros and cons of investing in this company. Please note, this is not financial advice, as it was created only for educational and entertainment purposes. As I want to be mindful of your time, please feel free to use the timestamps located at the bottom of this video to skip to parts that are of interest to you. Now let's get started. Lockheed Martin is a global security and aerospace company that has grown to become one of the world's largest defense contractors. Founded in 1995, Lockheed has a history of creating well-known military assets, including the AC-130, F-35 fighter jet, Patriot and THAAD missile defense systems, and Black Hawk helicopters. With a history of sustained sales growth, an annual net income of over $6 billion, and President Biden nominating William LaPlante, a strong Lockheed Martin supporter, to be the Pentagon's next chief weapons buyer, Lockheed Martin may be worth considering in an all-weather investing portfolio. Now let's take a look at how the company makes money. The company operates with four major business segments: Aeronautics, Missiles and Fire Control, Rotary and Mission Systems, and Space. Lockheed's Aeronautics segment designs, manufactures, and supports advanced military aircraft, including the F-35 and F-16 jet programs, unmanned air vehicles, and related technologies. This segment netted approximately $26.3 billion in sales and accounts for 40% of the company's business. The F-35 Joint Strike Fighter is the segment's best-selling product, as the F-35 program, by itself, accounts for approximately 30% of Lockheed's sales. Other notable products include the AC-130, F-22 Raptor, and F-16 Fighting Falcon. With 8 international program partners and 6 military sales customers, the F-35 program may continue to grow, as both Finland and Switzerland have selected the F-35 for their new fighter jet programs. In December 2021, the government of Finland placed an order for 64 F-35 jets, a contract worth $9.44 billion. Switzerland also looks to acquire 36 F-35A fighter jets for $6.35 billion. The Pentagon also awarded Lockheed with a $49 million contract to design and develop a new F-35 variant for an unnamed ally. Lockheed also secured a $211 million contract to support Lots 15 and Lot 16 F-35 fighter jet production for the United States Air Force, and an $847 million contract to build 105 additional F-35 jets for the U.S. military, accounting for 17% of Lockheed's business and netting $11.3 billion in sales. Lockheed's Missiles and Fire Control segment provides air and missile defense systems, tactical missiles, air-to-ground precision strike weapon systems, ground vehicles, and energy management solutions. In November 2021, Lockheed announced its plans to deliver the first THAAD air defense missile system to Saudi Arabia in 2023, as the Kingdom of Saudi Arabia expressed its interest to spend more than $28 billion in integrated air and missile defense and other defense projects. Lockheed's delivery of the THAAD missile system will put it in a great position to secure additional contracts from this U.S. ally. With China and Russia showcasing hypersonic missile capabilities, the United States and the UK are racing to catch up by increasing budgets for hypersonic-related research. Pentagon officials recently estimated that Army and Navy programs that share a common missile may alone add a combined $28.5 billion to the service's budgets over the coming years. The Pentagon aims to increase its fiscal year 2021 budget of $3.2 billion for hypersonic-related research to $3.8 billion for 2022. This is promising news for Lockheed Martin, as it has long-time partnerships with the Department of Defense, and it had recently opened its 65,000 square foot hypersonic missile assembly building in October 2021. As Lockheed's second-largest business segment and netting $16 billion in contracts, the Rotary and Mission Systems segment designs and develops helicopters, surface ships, sea and land-based missile defense systems, radar systems, and command and control mission solutions. In December 2021, Israel signed a contract valued at approximately $2 billion to acquire 12 of Lockheed's CH-53K King Stallion helicopters. Australia had also announced its plans to replace 47 Taipan helicopters with Lockheed Martin's Black Hawk and Seahawk helicopters, a plan which would cost $4.8 billion. The $770 billion defense bill that President Biden had signed has 5 contracts with a combined value of $753 million for Lockheed Martin to provide components for various electronic systems and radar-related projects. In addition to providing sustainment services for the Seahawk, Black Hawk, King Stallion and combat rescue helicopters. Lockheed's Rotary Emission Systems is also developing the next presidential helicopter. The U.S. Army has also selected Lockheed Martin to be one of 2 finalists to develop its Future Long-Range Assault Aircraft and its Future Attack Reconnaissance Aircraft programs. Netting $11.9 billion, Lockheed Martin's space segment designs and develops satellites and spacecraft for both government and commercial customers. In addition to providing earlier warnings of severe weather conditions and GPS directions to billions, Lockheed Martin satellites also provide early missile detection, connect troops on the battlefield, and provide a way for the military to gather, analyze, and securely distribute critical information. Lockheed Martin is an industry giant with a market cap of a whopping $102.76 billion. It exhibits a strong balance sheet as it sits on $2.73 billion in cash and has an untouched revolver of $2.5 billion. Lockheed Martin has also been reducing its long-term debt consistently over the past 3 years. Taking a look at the past 12 months, Lockheed Martin generated $66.3 billion in revenue and a net income of $6 billion. In the third quarter of 2021 alone, it generated $1.9 billion in cash from operations and returned $1.2 billion of cash to stockholders through its dividend and share repurchase programs. Lockheed has a strong track record of providing value to its shareholders by increasing its dividend payouts every single year for the past 20 years. Over the past 5 years, the stock's dividend payout has increased 9.8% on average each year. And things don't look to be slowing down, as management announces plans to spend $3 billion in dividend payments across 2022 and up to $6 billion in share repurchases through to the middle of 2023. With 21 analysts covering the stock, its average target price is $390.13. And its median price is $386.50. Analysts believe the stock to be worth between $350 and $450 per share, and as Lockheed is currently trading towards the bottom of that range at $372.62, there may still be quite a lot of upside with the stock. It may also be worth noting that over the past 2 decades, Lockheed Martin has grown its operating earnings on average by approximately 10% each year. This growth continued despite recessions and changes in political administrations. Taking a quick glance at Lockheed's 5-year graph, its stock price has grown by over 47%. Despite the company's steady growth and the general public consensus that the government will spend nearly unlimited amounts of money for military spending, it's always important to identify risks to consider. Here are 3 potential risks to watch out for. Lockheed Martin is expecting a small decline in sales as it expects to generate only $66 billion in revenue in 2022. When looking at revenue, it is important to also pay attention to operating margin, which is a measure of how much profit the company would actually make on each dollar of sales after paying for variable costs. Lockheed Martin expects a segment operating margin of approximately 11%, which translates to a small decline of 2 to 3% from previous years. Cost control and operational execution are 2 other risks to consider, especially as the projects that Lockheed Martin undertakes have large R&D and operational execution costs. Another risk to consider is the increased competition for Lockheed's space segment. With the recent surge in interest in space, companies like SpaceX may cut in on the market that Lockheed's space segment previously enjoyed an oligopoly on. That said, Lockheed Martin still has a lot of things going for it. Here are 4 things to keep in mind. 1. Each of Lockheed's business segments operate with a wide moat, as there are a limited number of direct competitors, making it difficult for new participants to enter the field. With less competition, Lockheed Martin can continue to enjoy its pricing freedoms, as it has more leverage to negotiate favorable pricing. 2. If a small company manages to successfully secure a small niche within the sector for itself, Lockheed Martin has the cash on hand to acquire these smaller companies. Lockheed Martin is using this tactic in its plans to acquire Aerojet Rocketdyne, the last independent supplier of solid fuel rocket motors, in the first quarter of 2022. Such a move would not only improve Lockheed Martin's supply chain, it would also provide pathways for both companies to reduce operational costs, while also forcing direct competitors of Lockheed Martin's missiles and fire control segment to become its customers. 3. Defense contractors such as Lockheed Martin can be viewed as non-cyclical, as the U.S. government provides a constant demand for missile development and defense, regardless of economic trends. Whether or not institutions and politicians are using this as a hedge against recession or inflation fears, one thing to note is that there is bipartisan support for these defense projects, which is evident in the defense bill that had been recently signed into effect. Last but not least, President Biden had nominated one of Lockheed Martin's strongest advocates, William LaPlante, to be the Pentagon's next chief buyer of arms. William Bill LaPlante had been the U.S. Air Force's top acquisition official from 2013 to 2015, during which he oversaw the acquisition of Lockheed's F-35 jets. This involves quite large amounts of money, as the F-35 program alone accounts for roughly 30% of Lockheed's sales. In case you were wondering what Bill had been up to since the Obama administration, He became a senior executive at Mitra's Center for National Security before becoming the president and CEO of Charles Stark Draper Laboratory. It may be worth mentioning that in November 2021, the Department of Justice in the District of Massachusetts revealed that Draper Labs had agreed to pay nearly $3.5 million to settle allegations of improperly overcharging the U.S. Navy, with President Biden nominating William LaPlante to be the Pentagon's next chief buyer of arms. Rising tensions between the United States and China, Russia, and other countries, and the ever-increasing budget for hypersonic-related research, I would not be surprised if Lockheed Martin's sales somehow beat expectations. And that concludes my very first video, which had been a big step that I had been very hesitant to take. So if you found this video to be informative, helpful, or entertaining, I'd greatly appreciate it if you could share it with others, or leave it a like or comment so that I could be inspired to continue making more videos to share my findings with you. Hope you all have a great rest of the day or evening. Until next time, take care. Louie out.